Hey everyone, and welcome to the March 6th Stock Talk for everyone. I want to get this video out for everybody because there is a major change in the market's tone. In the last video, it wasn't too long ago, it was probably last week, we talked about how if SPY isn't and cannot get above SPY 281, then we're going to be moving lower. And there's a potential that we can move lower and more than you originally thought. So let's take a look at the S&P 500 because what we can see is a definitive rejection at 281. One question would be, well, Kevin, isn't this really obvious? I mean, everyone who does technical analysis knows that. Look at the reaction here, look at the reaction here, and look what's happening right here. Isn't it looking like, we're going to come down? Is it going to be so obvious? Why can't we just bounce off of these moving averages and move higher? So here's the deal. I think, and this is my opinion, what we are seeing right now seems to be the start of what we're seeing over here when we first came down, and this was during the October 10th or October 9th. These were just 2 or 3 days before a major correction occurred. We're seeing signs and developments in the markets to set the stage for a bearish tone, possibly for at least a couple of days, possibly even a few weeks. That's what we're seeing right now. And this is conditional because that, in my opinion, I break it down as simple as I can for you guys on YouTube, right? So if we can get over 281, that bearish scenario gets tossed out, okay? But until then, the major thesis is that the markets are going to be moving lower. It doesn't mean that we can't have a reaction at the moving averages, okay? I'm not dismissing that fact that we can't have an intraday reaction at that level. However, I think, and this is what my thinking is, that we've had an extended run. Now we're making some sort of top. You can see this top that is being about to form. As long as we can't get over 281, sure, we might have a pop back to 281. That's not out of the possibility, but the direction is lower. Where is my first near-term target that should act as support intraday? It's at the moving averages, around 274 to 275, okay? No doubt about it. That level doesn't have to hold, okay? I will now give you targets in which we could potentially get to. Right now, you might think it's a little premature, even a little bit out there to say these targets, but I'm going to give you these targets because we might get there a little faster than what other people may think. Okay, so here's the deal. We have this target right here, 270 to 271. That's my first target. That level can hold, but it doesn't have to. My major level that I'm looking at is around 263. That's my first level. And then, of course, this level, 257. Okay, so you're like, well, Kevin, how can this strong market bend over and retrace all the way back down there? Well, I'm going to ask you the same question. How does a weak market rally all the way back up here? It's the same deal. The markets are moving rather linearly. It's not fluctuating as much as you would think. So my point here is that I'm giving you everyone here a heads up as what potentially could happen. Now, if you want more analysis intraday, check out the course. Check out the group, the Discord chat group that we are pretty active on, very active on every day. We provide all sorts of insights and even more potential targets and why those reactions occur at those areas. But here it is. Okay, so this is SPY. It's getting very interesting out in the markets, let me tell you. And people are not going to be expecting this, I don't think. Here's TVIX. You look this, and volatility is making a move back to the upside. Can you see this? How it's attempting to make a move back to the upside. Furthermore, when you look at, let's say you look at the intraday chart, you can see how volatility has been steadily climbing, and it's still going, okay? And what you can see here is every attempt in terms of negating the pattern of an uptrend for TVIX has been met with more buying. Can you see how we get met with more buying of volatility? This, in the near term, if you look at volatility TVIX, in the near term, it looks like it's moving higher. So we have to be very careful in this market right now. So that's TVIX for volatility. All right, so we have some interesting developments in the IWM today. The IWM, why was it down 1.96% compared to the rest of the markets? Look at how the IWM has caved in so quickly. This is troublesome because when we cave in so quickly, what happens is it can go down even more the next day. Today is only day one. The IWM dropped nearly 2%. The other indices didn't drop as much, but we know that the IWM is one of the indicators that we use as broad market movement, right? So this is signaling caution for everyone. Okay, if this doesn't signal caution, I don't know what will. Right? So be very careful right now in the markets. All right, so anyways, let's take a look at crude oil. We'll take a look at commodities really quick. Crude oil, you look at this, is moving flat. It's not moving up, and it's to no surprise that the broad markets are not pushing higher and crude oil is not pushing higher. What was interesting, and I agree with this fact, is that crude oil held the moving average, the 20-period moving average, while the broad markets did dip a little more than usual. So that is interesting, but you look at this chart so far, it looks pretty bullish, right? Because we're still on an uptrend. The only thing about this chart is you think about this, if the broad markets are going down, crude oil, how well can it sustain itself above the moving average? That's a question that, that should be asked. So anyways, while it looks bullish, it could quickly turn bearish as well for crude oil. So don't be surprised if we start breaking the moving average. Gold. So gold, you can see here we are at my near-term support. I mean, it's not unusual to see a bounce off of this area before a rejection. Gold is bearish, obviously. I wouldn't be surprised if there's a bounce, but this is on a downtrend. So look for this to continue lower. And then natural gas. When we look at natural gas, you can see that right now, natural gas is short term, in my opinion. It's still moving higher. What you can see is it's over the 20. It's below the 50, but I think it has the ability to push higher. But, it's very difficult because right now you can see we're still below the 50. We're still below a major resistance of 3.0, but we are above this support area. And because we're kind of wedged in between a support and a resistance, you can see the support, the 20 period, the resistance very close by up here as well. There's really not as many trades as you would think for natural gas. That's my opinion, of course, but that's natural gas for everyone. So I want to do a quick update in terms of the broad markets and what we're seeing for the S&P 500. And things are developing finally and there's a shift in tone. So take it as you wish, but right now we do not have a sign of the markets pushing higher. Okay, so for now, I think bears are in control. Thank you very much for watching this video. Check out the course if you haven't. Please leave a like or a thumbs up if you enjoyed this video, and if you didn't, welcome all the feedback as always. Thank you very much for watching this video, and I will see everyone later.